Welcome back to the channel, everyone. Today I want to talk about how Melvin Capital just went bankrupt and is being wound down. I want to talk about why I think that Gabe Plotkin is winding down Melvin Capital, what he recently tried to do to escape bankruptcy, and what's likely to happen next, and what options Melvin actually have. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Bloomberg posted this article saying that Plotkin shuts the Melvin hedge fund, which was left reeling after the Redditor attack. It says the firm never recovered from the GameStop short squeeze back in 2021. Gabe said, "I now recognise that I need to step away." More than a year after Gabe Plotkin's Melvin Capital Management was grievously injured in a short squeeze by amateur traders that organised on Reddit, the $7.8 billion hedge fund is giving up and shutting down. Plotkin's abrupt decision, announced in a letter to clients on Wednesday, ends his attempt at a long-shot comeback funded by some of Wall Street's biggest players, aka Ken Griffin from Citadel Securities. The effort showed initial promise last year, but unravelled in recent weeks as he racked up new losses and frustrated backers with a short-lived plan to reimpose fees. Gabe Plotkin wrote in a letter to investors saying the past 17 months have been an incredibly trying time for the firm and for you, our investors. I have given everything I could, but more recently, that's not been enough to deliver the returns that you should expect. I now recognise that I need to step away from managing external capital. Now, I think it's important to talk about what Gabe Plotkin has been trying to do over the last few weeks to avoid bankruptcy. Melvin Capital are obviously still holding their original GameStop short position and have likely also received additional offloaded short positions from other funds like Citadel Securities in stocks like AMC, BBBY, BlackBerry, and the many other shorted companies in that short basket. Melvin have obviously been trying to figure out a way to offload all of these shorts into the market without bankrupting their fund, but Gabe Plotkin has obviously realised that there's simply no hope. Nazim tweeted saying cascading liquidations are about to start on Wall Street. They were hoping for an economic meltdown and a market-wide recession to try and push or cover their short positions at the last minute. Now, there's obviously two main forms of selling pressure. You've got natural selling pressure, where retail investors and other investors sell their shares, and you've obviously got unnatural selling pressures of funds and firms increasing their short positions. To push AMC and GameStop down over the last 9 months, these hedge funds have been shorting more and more and more AMC shares to obviously push the price down. They've been creating more and more synthetics. Now, these funds like Melvin Capital can't push the price of AMC down to say $2 per share or $1 per share and then cover their short positions, because they'd have to first cover all of the new shorts that they created to push the price down and then cover their original shorts. For example, if Melvin and Citadel created an additional billion synthetic shares to push the price of AMC down to $1 per share and then cover their shorts, they'd have to first cover this new billion synthetic shares, pushing the price back to $10 to $15, and then cover the original shorts. If Melvin and Citadel covered that first billion synthetics, it would push the price of AMC back from $1 to $10 to $15. Then Melvin and Citadel would have to cover the additional synthetics they've created over the last 9 months, pushing the price of AMC back to $72 per share. At that point, they could then cover their original shares and original synthetics and original shorts, but at that point, it would cause the AMC squeeze and would definitely bankrupt Melvin and Citadel. Melvin and Citadel were hoping for this economic meltdown, and they were hoping that retail investors would panic and sell all of their AMC shares, naturally pushing the price down to under $1 per share. At that point, Citadel and Melvin could cover all of their synthetics after the apes have sold all of their shares. But obviously this current market crash and current recession isn't causing the apes to panic and sell their shares, and instead is causing Melvin's collateral to drop drastically, meaning they're unable to get out of the abyss. Also guys, if you haven't already, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. With BlockFi, you can trade tons and tons of different cryptocurrencies like Decentraland or Mana. You've got Sand or Sandbox, Matic, Doge, Avalanche, and many others. BlockFi is also a platform that's entirely free to use and requires no minimum balance, and that's why more than 500,000 people trust and use BlockFi. They also have a rewards credit card with an introductory rate of 3.5% cashback. Obviously, back in January 2021, Steve Cohen's 0.72 and Ken Griffin's Citadel bailed out Melvin Capital with that $2.75 billion loan. But obviously over the last 9 months or over the last year, they've now come to realise that Melvin can't escape from this abyss that they've created because retail aren't going to sell their AMC and GameStop shares, and therefore Citadel and 0.72 have withdrawn the majority of this $2.75 billion investment. On top of that, obviously the market is crashing, which is obviously crushing Gabe Plotkin and Melvin Capital's overall fund, falling an additional 23% through to April this year. Melvin Capital have obviously been left high and dry and are very, very quickly approaching this margin call position and are therefore going to close down the fund and return money to the investors. But I personally believe there's additional reasons as to why Gabe Plotkin is closing the fund now and isn't waiting a few more months to see if the apes panic sell. Unusual Wells tweeted saying the SEC has launched a search through 100 plus personal mobile phones of top Wall Street dealmakers as it widens its probe into secret messaging through platforms such as WhatsApp. It says the SEC is targeting up to 30 top bankers and traders at each major bank it contacts to provide personal mobile devices to be examined by lawyers. After these crackdowns on Bill Hwang and Bill Hwang's employees currently snitching, and the fact that Bill Hwang is snitching himself on Morgan Stanley and the short sellers, I think Gabe Plotkin is trying to bide his time and get out while he still can. Gabe Plotkin obviously realises there is a massive crackdown happening right now and people are actually going to be going to jail. As a result, Gabe Plotkin is going to try and get out now, close down the fund and hopefully avoid prison time. Not only do we have Bill Hwang snitching, not only do we have Bill Hwang's employees snitching, but we've now got the SEC doing an investigation into 100 plus mobile phones on Wall Street. We know that it's very likely that Gabe Plotkin and Ken Griffin have been having secret conversations about the creation and transferring of those synthetic shorts. I think Gabe Plotkin is trying to get out while he still can before the SEC request access to his phone and effectively close down the fund and run away. As the firm unwinds, Plotkin has outlined plans to return investor cash. Melvin has already materially reduced the fund's exposure and will not be charging management fees as of June 1st. At least 50% of investor cash will be redeemed by May 31st and the rest by June 30th. And now I want to talk about what's likely to happen to Melvin Capital and what's likely to happen to AMC as Melvin unwinds. Obviously, as the firm unwinds, Plotkin outlined plans to return investor cash. To return cash to investors, he obviously has to sell off his long positions and cover his short positions. Now, obviously, to return that investor cash, he has to formally close all of the positions in order to formally wind down the company. Not just close the real short positions, but also close those synthetic shorts as well. Now, obviously, if Gabe Plotkin closes all of those positions, including those synthetic shorts, it theoretically would cause the AMC squeeze, as all of those synthetically shorted shares would have to be bought back at whatever price we're willing to sell at. But I do think that Melvin Capital have one potential final way to kick the can a little further. You may remember this tweet from my other video where Cash Cow asked Peter Han if Citadel had actually transferred their short position onto Melvin Capital. Obviously, this is something that has been rumoured for a long time that Peter Han also agrees with. He said, I think it's likely in some fashion that Citadel did transfer their short position into Melvin. And therefore, theoretically at the same time, there's nothing that stops Melvin Capital from transferring their short position onto another unsuspecting hedge fund. Now, I guess the only problem that Gabe Plotkin may run into is finding somebody stupid enough to take on this giant GameStop and AMC synthetic short position that would most likely bankrupt the fund when AMC and GameStop squeeze. Now, if Melvin Capital can find another hedge fund to offload their short position into, theoretically, Melvin Capital can wind down, sell off their long positions, transfer their short positions, and close down without causing the AMC and GameStop squeeze. But obviously I do think it will be very difficult for Gabe Plotkin to find somebody stupid enough to take on this giant toxic liability. Personally, obviously I'm hoping that Gabe Plotkin can't find anyone stupid enough, has to bear the full weight of the liability of those GameStop and AMC shorts and ends up potentially being liquidated in the process and losing all of his investors' money when AMC and GameStop squeeze. Now, obviously, I don't want investors to lose money because that's real people losing millions and millions of dollars that they haven't really had any say over. But I do want Melvin Capital, obviously, to be liquidated when they close that AMC and GameStop shorts, causing the AMC and GameStop squeeze. Now, it seems like Seeking Alpha may know something we don't because they've just posted a new article saying that another short squeeze is coming for AMC and GameStop. They said AMC posted a strong Q1 2022 earnings report. They recently disclosed a 6.8% stake in National Cinemedia, which it received for free, and the AMC short interest currently sits around 21%. They've talked about AMC's strong Q1 earnings, the great box office films that have came out so far, and the brilliant ones that are yet to come out later this year, and also spoke about the large investments that have recently been made into AMC by Bridgewater Associates and Goldman Sachs, and also some recent AMC investments into Highcroft Mining, and obviously this stake in National Cinemedia. Now, I wanted to quickly touch on the market this morning. We're seeing crypto down again, with Bitcoin down nearly 3%, Solana down 10%, and Avalanche down 17%. And we're also seeing the pre-market futures for the S&P 500, the FTSE 100, and many more stocks also down as well. It seems after a very heavy red day yesterday, the market is looking to extend its losses and potentially set new recent lows. Again, I just think this is going to amplify the current market crash even further, and we could see the S&P 500 fall below that $380 region, down towards that $350 region. So guys, be sure to leave a comment down below and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!